Hello everyone, welcome to my video. I am CA Prakash Padalia. I am a CA by profession and a trader and investor by passion. So before starting today's video, just a small disclaimer from my side that this is just an educational video to display my technical and fundamental study on this particular stock. Please do not read this as a recommendation since I am not a SEBI registered advisor. So you must be seeing the chart of IDFC First Bank monthly chart on your screen. Now monthly chart means that one candle is equal to 1 month. So this is a chart from March 2020 till now. You must be seeing various numbers and alphabets on your screen. So this is basically a leading diagonal which I have drawn. If you see the wave A, it was from 29 to 69. The wave B, which is a corrective wave, it was from 69 to 29. Wave C, it was from 29 to 100. Wave D, it means the correction which just took place from 100 to 52. And looking at the structure, if you see the trend line connecting the COVID low to B to D, it seems like the correction at D has ended and now the stock is ready to go up in the form of wave E. Now, this was leading diagonal as per Elliott wave. Now, let me go into the depth of leading diagonal by my time study. If you look at these two, from the COVID bottom till the next bottom, from trough to trough, it took 27 months. Then from B to D, that is again from trough to trough, it took around 34 months. So we can say that this stock takes around 27 to 34 months from bottom to bottom. And if we look from top to top, from A to C, this stock has taken 30 months. Therefore, if we take the average of this 27, 30 and 34, it will come somewhere between 30 and 31. Hence, if we extrapolate 31 months from C, we get the point E where there is going to be next major top. What do I mean by major top? Wave A was a major top, wave C was a major top, and now E will be the major top, and that will be in May or June 2026. So this was my time study that correlating from trough to trough and from top to top and extrapolating the same number from C into the future, we get something, some month as May or June 2026, where there should be a next technical top. So this was my time study. Now, if we come to our price study, I have used Elliott, I have used Fibonacci for the same. What is Fibonacci? Fibonacci is a universal number law. So for those who know Fibonacci extension, what I've done is I've connected COVID low till point A and then till point B. So 1.382 extension comes to 100.33. And you will be shocked to see that the top of C was exactly 1.382. Now again, extrapolating this into the future, what I've done is I've started from the point B till C and then D. So 1.382 comes to around 151.62. And third point is I've drawn a simple trend line connecting A and C and again extrapolated into the future. Now, even this comes to around 151 and this portion coincides with three things. One is the trend line which we just drew. Second is the time cycle study. And the third is by Fibonacci target. So 3 points are coming into one place, which is around 151. And therefore, I feel that if the next bigger wave has started, which is wave E, the price target could be 150 with and in around 5-6 quarters, which is like May, June 2026. Now, this was my Elliott wave leading diagonal study. Now, to support this, I am having the valuation study, like the fundamental valuation. I have used price to book value. Now, all of you must be knowing that in COVID, the bank had hit a low of 18 rupees, 17.65 to be precise, which was clearly below the book value. Then the next bottom, which was in June 2022, it was below the book value. So the price to book value was below 1, and the current bottom in the last month, that is March 2025, was at 52, which is again at a price to book value of 1. So it is very clear that the bottoms in this stock are happening at the price to book value of 1, and the tops in this stock, they are happening at somewhere around 2.2 to 2.4. Like for example, in March 2021, the price topped out at 69 when the book value was 31. So the price to book value was 2.23. And in September 2023, the price had topped out at 100 and the book value was 41. Therefore, the price topped out at a price to book value of 2.44. Therefore, this stock has a tendency of making a top at around 2.2 to 2.5, and it has a tendency of making the bottom at around price to book value of 1. Hence, I'm convinced that after this month's candle, which has given 15% returns in a quick time, I think the bottom at 52 is done. And if even if you see the confluence of trend lines, I have drawn 3 trend lines over here, and the price exactly bottomed out at this area. Another factor which supports that IDFC First Bank is ready for a rally is the weighted average volume. I have considered the volume from March 2020 to April 2025. Now, this number is somewhere around, say, 54 or 55, and the price has convincingly broken out of that. And if you see over here also, there was a morning star at exactly the same volume. And right now there's a big green candle and they surpassed that volume. So Ivan, this is a very strong point that the smart hands, the bigger fishes have accumulated the stock at this price. And therefore, if the stock has broken out of the range, it means that the stock is ready to fly high. Another one could be the sector is very important. When we discuss any stock, the sectoral study and the overall strength in the sector again is very important. Now, why I feel that this stock is going to get the support of the private banks is this ratio. The ratio of Nifty private banks divided by Nifty PSU banks. From 2022, from 2012 to 2022, from 2012 to 2020, the private banks had heavily outperformed the PSU banks, and therefore the ratio is going up. But something changed in 2020. From 2020 till last year, the PSU banks were doing exceptionally well, and the private banks had not given any returns. Therefore, this ratio has come down. But if you see this trend line connecting 3 points, now again it has given a breakout, and therefore it's an indication that private banks will do better than PSU banks. And especially if you look at these valuations, some of the private banks are available at a price to book value of 1. Therefore, I think that the capital might be shifting to private banks, especially to mid-sized private banks. So it is getting the support of the sector also. Now, if you want to look at the fundamental part of it, that why I think that IDFC reaching 2 to 2.5 book value is possible. This is my screen. So target of 120 to 150 till June 2025. Now, considering the new fundraising, IDFC has a total of 858 crore shares. The book value is 52.85. Therefore, the net worth is 45,345. Now, if we look at the profit of the next 6 quarters, if I consider 20% growth over the 2023 profit, next 6 quarters profit, if they add up to 4,500, which I think is possible because at one point of time, bank was consistently delivering around 700 to 800 crores profit for around 4 quarters. And if the provisions and all have done, if the toll plaza loan and the MFI provisions are done, it is likely that in the future also the bank will again come up with 800 crore profit quarter. And over the next 5 quarters, 5 to 6 quarters, I think this number is possible, like uh, PAT of 4,500. And therefore, the net worth in June will be around 50,000. So if you look at the book value at that price, uh, so if you look at the book value at that net worth, it comes to around 58. And considering the previous tops were 2.23 and 2.44. So if this time bank comes somewhere near 2.3, 2.4, the target of 140, 150 is possible. So our fundamental valuation also says that 150 is possible, and even the technical say that 150 is possible. Now, another gray area in the stock is that many people say that the bank is raising funds every year, and therefore the return ratios are getting suppressed. Yes, I agree. The bank is raising capital very frequently, but this time bank has raised around 7,500 crores, which is like 15% dilution. And therefore, I feel in the next 3 years, bank will not be needing any extra capital. So for next 3 years, without any dilution, the bank, yes, the return ratios will be suppressed, but for a new bank, I don't think return ratio should be looked at. What they are building should be looked at. And if you see the past also, whenever the bank has commanded around 2.25 to 2.45 price to book valuation, the return ratios weren't great. So it's a cyclicality of the stock that it fluctuates between price to book value of 1 to 2.5. And again, I think there is the time has just arrived to again look at the bank at around 2 to 2.5 price to book valuation. Now, one advantage of raising capital right now is this: if you understand something called as leverage, if you divide your loan book by net worth, you get a specific number. For example, before the fundraising, the loan book was 2,31,000 crores. The net worth was 38,500 crores. And the leverage of loan book divided by net worth is 6. It means that if you are having a capital of 1 rupee, you're giving out rupees 6, which is a leverage of 6 times. But what has happened after the fundraising is that the net worth has increased by 7,500 crores. It has become now 46,000. So the leverage of 2,31,000 divided by 460 comes to 5. So the bank is in a safer position now. The capital adequacy ratios have improved. So any black swan event, obviously they cannot be predicted, but any black swan event will not give a kick in the tummy of the bank. The bank will be in a healthy financial condition. So therefore, it gives the banks the wings to fly, and that is exactly what our technical charts are saying. So this was a small study on IDFC First Bank, and again I'm repeating. I'm not a SEBI registered advisor. These are my targets, which I'm going to look forward to in the coming quarters. If you like my video, thank you so much. And please consult your financial advisor before making any decision on this stock. Thank you.